Thank you, Chair. Apologies for absence from Maria Battle, Professor Medwyn Hughes, Councillor Steve Hunt and Karen Jones from Neath Talbot Council.
And I believe we have some representatives who are standing in for those members today. So can I welcome Councillor Martin Peters on behalf of Councillor Steve Hunt from MPT and also Stephen Baldwin, who is representing Medwyn Hughes. Welcome both. And Nicola Pearce, who's representing Karen Jones. So welcome all. We'll move then to declarations of interest. There are any declarations that members need to make today for any items on the agenda? Yeah, Chris Foxall, please.
Yes, thank you, Chair. So it's 2 items today. So agenda item 6, discussion about co-opted members, and agenda item 7, which is ratifying the re-election of the Chair for the ESB.
Thank you. And those are personal and prejudicial, yes?
Yes, personal and prejudicial. Thank you.
Okay, thank you. Any other declarations to be made? Okay, we'll move then to item 3, which are the minutes of the joint committee that took place on the 10th of November 2022. I've not been advised of anybody wishing to make any amendments to the minutes, so if I could ask if you're in agreement, if you could, colleagues could raise their virtual hand, please.
Virtual hand.
Your real hand or virtual hand, either is good. Either is good. Thank you very much. That's carried unanimously. Thank you very much. We'll go to announcements of the chair. I have none at this present time, but obviously just to say we're now into 2023. At the end of 2021, we reached the position of all 9 programmes and projects being fully approved. And of course, last year saw the opening of the arena in Swansea. The build of the 71-72 Kingsway site is well progressed, as we will see as we go into some of the updates later. But we remain the only deal in Wales which has allocated all of its money, has all of its projects in delivery mode. And again, I'm sure members are excited for continued delivery of our deal in 2023. So I think it's an exciting year. A few headwinds, as I'm sure we'll talk about later in the meeting, which are affecting every area of the UK. But I think our deal is best placed to make some good progress this year. I'll move then on to item 5, which is public questions. Have we received any questions for today?
No public questions received, Chair.
Okay, thank you. With that then, I'll move to the agenda full. And just to say, in terms of the items today, I intend taking items 6 and 7, 10 and 11 and 12 first, please, as I know that some members may not be available in the latter part of the meeting. So those are the items which will require votes. So I intend to take those first. So first item then is the election of Swansea University co-opted member, and I'll go. Yes, Chris, if I could ask you to dip out at this point, and we'll invite you back into the meeting at the appropriate time.
Thank you, Chair.
Okay, thank you. So with that then, election of Swansea University co-opted member, and I'll go to, I think it's Phil Ryder, who's going to take us through this item.
Yeah, thank you, Chair. Just to note, I note Chris has obviously just dropped off the call. Professor Boyle is on the call as well. I don't know if Professor Boyle needs to just drop off as well.
Apologies. If we could pause there. Paul, if I could ask you to dip out at this point in time, as you'll have an interest in this item.
Yes, that's absolutely fine. And somebody will call me back in, I take it, after.
Absolutely. Okay, thank you, colleagues. Phil, back to you.
No worries. Thank you, Chair. So yeah, the item is a fairly straightforward item. With the recent retirement of Pro Vice Chancellor Steve Wilkes, the request is that Vice Chancellor Paul Boyle is an appropriate and suitable representative for Swansea University, one of the strategic partners of the City deal, and that the committee votes Professor Boyle as the for Swansea University. The paper includes a bio of Paul's role within the university, and that's as straightforward as this item is, Chair. So it's just a vote to confirm that the committee is happy that Professor Boyle is an appropriate replacement for Professor Wilkes.
Yeah, I'll just bring the legal officer in before we go to the vote. Tracy?
Thank you, Chair. And just to add, you will see the recommendation, it is set out on the front of the report, but the recommendation is also to approve the other co-opted members as are set out in Table 1. We do need to review them within a 5-year period. That 5-year period ends in August of this year, so we may as well do it at this juncture in one report. So you can see the recommendation is set out on the front of the report, and that is to approve the appointment of Chair, to approve, confirms the current co-opted members set out in Table 1 and approves the appointment of Paul Boyle as a replacement Swansea University co-opted member.
Thank you, Tracy. Therefore, two things really. I'll just, for the names for you, Emma Willett, Professor Medwin Hughes, Maria Battle and Chris Foxall are the people being moved today. Can I ask for voting members to show their approval of the support, please, if that's what your wish is. Thank you very much. I can see hands up there, so that is unanimous. Thank you. And can I also ask that we record our thanks to Professor Steve Wilkes for all of his help and assistance and participation in the Joint Committee during his period on the board. Okay, with that then, if that item is concluded and those members re-adopted or adopted, if we could call Professor Boylan, and we will leave Mr. Foxall out for the time being because he's mentioned in the next report. Okay, colleagues, we're just waiting for Professor Boyle to join. Okay, we seem to have a slight delay, but we'll proceed with the next report anyway. So we'll go on to agenda item 7, which is the review of the chair of the Economic Strategy Board. And that report obviously is self-explanatory, but I'll go to, just go back to my agenda a second. I'll go over to Jonathan Burns to take us through the report.
Thank you, Chair. So members of the Economic Strategy Board have undertaken a nomination exercise for the position of Chair and also Vice Chair of the Economic Strategy Board. So the members have collectively nominated Mr. Chris Foxall to continue as Chair, and also that they've collectively nominated Miss Amanda Davis to remain as Vice Chair. So there's no changes in terms of Chair and Vice Chair. Both Mr. Foxall and Miss Davis have agreed to continue in these roles. And we've also got confirmation from both Welsh and UK government that they're happy with that arrangement to continue. So it's recommended that Joint Committee approves the above appointments for 2023. So, Chair, back to you.
Thank you, Jonathan. So you have the recommendations there in terms of a reappointing, and we've had excellent support from Mr. Foxall and Ms Davis over the last few years. So again, the recommendation is there. Can I ask colleagues to show whether they're in support of that recommendation, please? By raising your hands. Thank you very much. Yes, that's unanimous. Okay, thank you, colleagues. So if we could call Mr. Foxall back into the meeting as well, please. And then we'll proceed to item 11. Okay, whilst we're just contacting participants to rejoin, I'll go over to Chris Moore to introduce item 11. So hold on just a sec, Chris, if you would. I believe Professor Boyle has joined us. So Professor Boyle, can I just congratulate you on being nominated and accepted to be a member of the board, and welcome you and welcome your participation in the Swansea Bay City region going forward. I don't know if there's anything you wish to say.
Just thank you to everyone. Looking forward very much to working with the group, and clearly the university stands ready to collaborate not only in the projects we might be heavily involved in, but also some of the other projects that are going on in the region.
Thank you, Professor Boyle. Okay, I'll go back then to Chris Moore to take us through the Swansea Bay financial monitoring report. So Chris, over to you.
Thank you, Chair. Yeah, this is the normal quarterly position, which is presented to you. It is based on end of November figures due to the timing of producing this report, but it is included forecasted positions at the end of the year, which is critical within the report. It is in three parts, really. It gives you a summary as to the sort of current expenditure on the accountable body function and the PMO office, etc. It then gives you a forecast investment projection, which admittedly is a bit challenging at the moment on the basis of one of the other reports on the agenda around some of the construction costs and the likely movement there that will possibly have an impact on this eventually. But because those positions aren't concluded and we don't know how some of it may pan out in terms of value engineering, etc., this is the latest information that we've had really from the project managers. And then the third part then is the current position in terms of the portfolio investment on the current year, and you will notice there's an element of drift there. If I take the first part, and I'd like to focus really on the appendix. The appendix actually breaks down three sections there in terms of the accountable body and joint committee function, the PMO office, and the scrutiny function. There is one quite stark amendment within this report, and that is the value of the interest that's accruing now. Obviously, we're all very much aware of some of the dynamics of what's happened over the summer, and one of the dynamics is that interest rates have increased significantly. So the fact that interest rates have increased significantly on short-term investments, and the fact that in many areas of the portfolio is actually running a little bit behind, there's a slippage. We are cash rich at the moment whilst it's being allocated, so we're holding those monies, and as a consequence in holding those monies there is interest accruing on those monies, and you will see on the forecast outturn column that there is a figure of interest paid in for the projects of 900,000, and further down you will see that that is also released. The reason why it's released is the way that we set the city deal up is that interest that accrues on any balances during the year is proportionately released back to the constituent authorities, and the purpose in releasing it back to the constituent authorities, and this was part of a previous agreement with the city deal joint committee, is it will help offset some of the interest liabilities that each of the projects have around delivering the project. Because bear in mind, we are, as constituent authorities, funding the grant funding that's coming from Welsh Government over the 15-year period, and that sort of helps with that. It is a helpful addition because the constituent authorities probably wouldn't have anticipated this sort of level coming in originally when they were planning it. But bearing in mind that we get no support in terms of the interest in respect of those schemes, it's a helpful addition. As regards to the rest, there are small variations. Nothing really significant if you take that 900,000 away from the joint committee and the accountable body, and that's really around the governance. Those are made up of basically SLAs with these each of the constituent authorities who provide in the various services. The The main one that's got an element of variation there is around the portfolio management office, and there is a slight underspend there of against budget of 120,000, and that is mainly down to staffing and the need for conference and marketing, advertising, consultants areas, and we haven't needed to draw on that quite so much this year. So that's a positive overall. And then further down then in terms of the contributions, in terms of the funding, you will notice that the overall surplus that we were anticipating has swung into a deficit, but that is due to the fact that projects have slipped, and therefore the top slicing that was planned to happen hasn't happened quite to the same extent, because we can only top slice when we fund the individual projects, and the money goes out from the city deal account, and therefore you'll notice that the revenue contribution originally planned as 723 is 449. That said, it's no big deal, because it'll right itself in the future years, because what you've got to bear in mind, like with any capital project, and this is very much a case that we're looking at more, we should be looking more at project focused as opposed to within the financial years, whilst we've got to account for it in the financial years. So that'll come out in the wash in future years, where that funding will come in to support the future year funding within the overall mechanism. So overall, there is that variance of 174,000, but that is really due down to the fact that we haven't been able to draw in quite so much of the grant top slice in this year. So that's really the first section. The second section then of the report goes on to projecting the portfolio investment fund and where that sits, and at the bottom of page 211 and top of the 212, that indicates really where the investment is projected at the moment over the whole of each of the project deliveries. And you will notice that there are a few variations. Probably the highest one in terms of overinvestment is along Pentre Owl, and the Swansea waterfront then is slightly underinvested at the moment, and there are reasons within the report for that. Certainly from Pentre Owl, it's a case of escalation of costs that came through earlier on in the year in terms of trying to finalise the costs, and there is still work going on there, as I know with my knowledge as SRO, but that was the projection back earlier on in the year. So no big deal, because the net movement there is around about 2 million, so 2 million additional investment on a £1.2 billion portfolio is, I would suggest, neither here nor there at this point in time, especially as they are all in delivery still mode at the moment. The third section of the report, which starts on page 212 at the bottom and runs through to 214 really, then actually profiles the investment of the portfolio at this point in time, and this does demonstrate quite a significant drift. And I think we're all probably very conversant for various reasons of why there is drift taking place there, and effectively the annual projection at the moment in current year is 82 million, which is down compared with the 85 million, compared with the 167 million that would have been the case. Now, that 85 million variation is down to a number of projects, and they're identified there both in terms of the mix between the private and public sector, and the table below illustrates it on a project by project basis. Again, there's a slight underinvestment at the moment with the waterfront, and I believe that is down to the fact that we've accelerated investment of city deal monies into that in the first instance, so that's a sensible approach. The underinvestment is with Pentre Owl because we are still under contract negotiations and there's changes there. And there is various slippage on some of the other schemes at a lower level. But I think they are really all explained if you've got any particular interest on the individual ones. But as I say, you know, it's very difficult, especially in today's market where there's a lot of construction work going on. There is a lack of supply of construction contractors to deliver. and there is escalation of pricing going on to get this to fit into one particular year. So it's more a case of a drift between the years than anything else. So it's nothing to report that is a problem, other than it's the sort of challenge in terms of the end point of delivery has possibly moved slightly. Chair, that really gives a summary of the content of the report. Happy to deal with any questions that may be there.
Thank you, Chris, for that. And yeah, absolutely accept what you're saying there in terms of slippage and the reasons for it. I think it's important as well to understand that given the bubble that we're in at the moment and the peak of inflationary costs which are impacting major projects and costs across the construction sector as a whole, as well as the rest of the economy, you know, that does have a benefit in terms of that spend being later and potentially at a more reasonable cost. So again, there are some benefits even from things being done slightly later. But as I said in my opening comments, we're in that really positive position of now having all of our projects approved and in delivery. And as you've said, this is a point in time which will obviously correct itself as further delivery takes place. So very grateful for the report. I'll open it up in case anybody else has any comments or questions for Chris on the report. I don't see any hands there. So in that case, we'll go to the vote. And could I ask colleagues to show if they're in approval of the report, please? Thank you very much. That's unanimous. Thank you, Chris. So we'll move then to item 12, which is the quarterly monitoring. So I'll go over to Phil Ryder, who will take us through the quarterly monitoring report. So Phil, over to you.
Thank you, Chair. Yeah, so the quarterly monitoring is pages 217 through 271 in the document pack. I'll cover off pretty much by exception. So the kind of key highlights from the dashboard this quarter are that there's very little change in the overall RAG, red, amber, green statuses that we've seen across the programmes and projects. The 1 point to note on the red RAG ratings is that the HAPS resource remains red. That was primarily down to the appointment of the supply chain lead within MPT. However, since the report has been created, the programme board have approved the use of an independent company to do the supply chain mapping, so there's no delay there in the actual activity progressing, and the overall status of the programme has been reduced from red to amber. With regards to waterfront, there was the overall resources moved from amber to green, and finances moved from red to amber, so things are moving in the right way there. We know that since the report, the innovation matrix has now completed their initial contract negotiations, we shall say, and in the next report we should be able to report who's been appointed for that particular project. But when it comes to the delivery timeline, there's no change this quarter in the actual reported delivery timeline for the overall commencement and completion of the project still to come. However, the procurement timeline is still aligned to the delivery timeline. Moving on then to the risks and the red risks for the portfolio. There is an increase in the quarter from 6 to 7 red risks. Chris did just allude to it. The reason there's an additional red risk, it's the particular pressures that we are seeing on the construction industry to meet not just the demand of the Swansea Bay City deal programmes and projects, but the wider demand on the construction industry and the wider public sector procurements. So we've put that as a precautionary red risk, obviously, because there's a potential there with that increase in demand that the industry may start to see some reduction in things like tender returns, etc. So that's the increase in the red risks. The benefits realisation has remained pretty static this quarter. However, that's a reporting and a time issue, similar to the financial report, but we do expect to see, we know there's jobs being created and investment recorded, and we expect in Q4 of this year, January through to March, and Q1 of 23-24 to see those uplifts reported across the jobs and investment for this financial year. In relation then to the financial management, there's not a lot I can add really to Chris's financial report. So I'll skip through that. And in relation to change requests, there's no additional change requests or notifications being received in this quarter. However, we are in discussions with a couple of the programs and projects about change notifications to be presented in the final quarter of the financial year. So we should see confirmation of any amendments that have been made to things like value engineering, etc., as been alluded to throughout the committee. Section 10 of the dashboard, the audit recommendations for the Gateway Review are now complete in anticipation for the 2023 Gateway Review, which we still propose doing at a portfolio level in June, as has happened in the last couple of years. And as we already mentioned, the procurement timeline is still aligned to the delivery timeline. And then if I quickly pick up on a couple of headline, I suppose, achievements across the individual programs and projects. Digital infrastructure have commissioned an independence benefits realisation exercise quantifying the programme impact to date, and this should be completed by the end of Q4 this financial year. And they've also approved an additional £100,000 in funding to the Regional Digital Innovation Network, enabling the project to expand its scope. PDM, key movement in the quarter has been in relation to PDZ, with a grid application being finalised and pre-application meetings held, and a circa £3 million tender invite has gone on to Sell to Wales for the offshore surveys and pre-feed technical design. In relation to HAPS, it was sent, I think, ex-committee following the Gateway Review in the summer. Assurance of Action Plan review was undertaken in November of last year, where the programme received an overall DCA of Amber, which is exactly where the review team expected to see the programme at this point in their delivery. Sport and Innovation Low Carbon Growth undertook an internal audit by NPT in November. That result of that audit was a substantial assurance, which is the highest achievable rating, which again underpins that the programme is moving in the correct direction and moving into delivery as expected. And finally, in relation to the Skills and Talent project, we've now had 6 pilot project applications have been approved by the RLSP board, and the final skills team members have been recruited and are now in post. So there's a very quick whistle-stop tour, Chair, and as I say, highlights by exception, but happy to take any questions.
Thank you, Phil. Are there any questions or comments for Phil? As you can see, again, significant amount of progress being made across the portfolio. In terms of obviously the ratings, I think that additional red is an appropriate red given the cost of living crisis and the pressures that we are seeing in the construction industry, which obviously we are not immune from, because major deliveries like the city deals are not immune to the big pressures facing the economy and the sectors that we obviously are involved in working with. So very appropriate that we add that. But again, a largely positive summary of where we are. So if there aren't any questions or comments for Phil, again, this one will need a vote. So if I could ask my colleagues if you could show if you are in favour of the vote, and if we could raise our hands, please. Thank you. And again, that is unanimous. So thank you for that, Phil.
Thank you, Chair.
We'll move back through the agenda then, back to item 8, and welcome Hugh Mowbray, who's going to give us an update in the on progress with the waterfront project, which obviously is one Swansea leads in the city deal. So Hugh, over to you.
Thank you, Chair. I think, Liz, if you can share the slides, please.
Yeah.
The first one, at least, if I can give a brief reminder, first of all, about the three projects. This is sort of a combined project with Trinity as well. So there are three key elements. The first one is the digital square and arena, which is the arena which is now complete, and elements of that, together with a hotel, is part of the city deal sort of mix for that project. And we are looking to report on the hotel to the Swansea Cabinet in March with a view to taking that forward, because we've recently had funding in place to now deliver that with the private sector, which is obviously a private sector delivery element for the scheme. The second element is 7172 the Kingsway, which is 115,000 square feet of flexible offices, and that will be delivered but towards the end of this year, and it is aimed at sort of high cost jobs in terms of tech industry elements. So again, it's a really interesting and innovative project. The third element is with Trinity, and that is the Innovation Matrix and Innovation Precinct, which are two buildings looking at capitalizing on the number of businesses that the students leaving universities actually sort of generate, and making sure we can keep them in Swansea with a view to sort of moving on to the 7172 the Kingsway after that. So if you can go to the next slide, Liz, please. This is Swansea Arena, which is now complete. Swansea Arena opened in March 2022 last year, so it's not yet been operating for a year. So that is sort of something which is now sort of proving to be a real benefit for the city centre. If you can go to the next slide, Liz. This just shows you some of the internal structures of the arena. It's 3,500 capacity in concert mode. It's 2,400 capacity in all seated mode, which is the top right-hand photograph. But it can also be split into conference areas with a 700 seating capacity area, which is in the top of the arena here. There's a wall which comes across where I'm indicating there, and that top area is a conference area, whilst the floor of the arena can be used as exhibition space. So it's extremely flexible, and there are a number of meeting rooms actually linked to that. In terms of what it's actually achieved to date, we've actually achieved about 9,000 targeted training and recruitment weeks with local people. 56 events have been completed to date in the arena, with 145,000 tickets sold by Ambassador Theatre Group. So that is showing the demand, and it is showing sort of the latent potential that was always there in the region for a venue of this nature, but is now actually sort of being demonstrated through the ticket sales, with events, a large number of events selling out in 5 minutes. Michael McIntyre sold out in less than 5 minutes. Hollywood Vampires, which is Johnny Depp's band, which is coming to Swansea, that sold out in about 3 minutes. So it's it really is showing that there is demand from the region for this as a facility, which is really positive. If you can move on to the next slide, Liz. 7172 the Kingsway. This is the office block, which is looking at tech targeted jobs. Sorry, it's jumped a bit there. So the tech targeted jobs, this started on site November the year before last, and is now sort of coming to conclusion. This will be completed in towards the end of this year. October is the current date in that respect. Obviously, we're looking at the targeted recruitment element, is working with Bouygues, the contractor, on this, and we are in the process of letting a space on this and producing marketing collateral to actually sort of get out there in the market in earnest. The first 25,000 square feet is in legals with a very good operator. So that's about a third of the building, which is already let. And if you go to the next image, Liz. This is showing you where we are now. It's if people who knew the original building that was on the site, which we demolished. It had 2 layers of basement, so we kept those. So after quite a lot of construction in the ground, the ground floor slab has now been laid, and we're actually starting to see the building now raise above the hoardings. So that is making very good progress, and there'll be a lot more visibility for people going past it in terms of moving that forward. So that is another positive project for Swansea, which is moving at pace now to actually sort of completion, and the key focus now moves to the lettings, which is something we're on board with JLL and Avison Young as agents to market that for us. If you can move on to the next one, Liz. In terms of the Trinity projects, the Innovation Matrix and Innovation Precinct, the first building there has now overcome its funding issues. That is now fully committed, and that is likely to be on site fairly shortly, with construction aimed at completion for April 24. The second building, the Innovation Precinct, there is likely to be a change request for this moving forward, which is looking to move it into the core city centre in Swansea to link in with what the city deal is catalysing in terms of the second phase of the arena project, which is in the St David's area, which is in conjunction with the councillor's long-term development partners, Urban Splash, and we are in discussion with Trinity on that at the moment. So that's another real positive, and all the projects are starting to move forward in earnest now in that respect. If you go on the next slide, Liz. In terms of business case updates, the original business case was 2017. That was updated in 2020 once the arena got to full business case level, and it's being updated again now to reflect the fact that the 71-72 Kingsway is at full business case as well, along with amending some of the milestones and some of the details in terms of that as a project. So that is obviously for consideration in terms of moving forward. In addition, there was a gateway review held for the Swansea Council elements of this, which was just for the arena and 71-72. It was given an amber green rating, which was really positive, and that was mainly because not all elements are complete at this moment. They recognise the arena has delivered successfully through the review. They praise the council in terms of the construction process for both the arena and 71-72, and the ability that we've managed to secure fixed price contracts for those. They recognise the risks in terms of the economic climate which have been discussed to date, but that obviously is mitigated to a degree through the fixed price contracts. And they did recognise that there is a very effective project management team in place, together with experienced designers and supervisors to control quality. So that is a good report for the digital project, which actually sort of puts us in good stead for moving forward to the future. So that is my update on the project at this point in time.
Thank you, Hugh. Again, a really positive update, and good to see all the progress that's being made. I don't know whether Professor Walsh is with us this morning, whether Ian wishes to come in and make any comment in terms of the Trinity St David's aspects. If not, all I would say, obviously, I think the ethos of the deal has always been, the public sector stepping in and taking the lead, but requiring a contribution and partnership with the private sector. Certainly from a Swansea perspective, we're already seeing the impacts of the arena investment, like a stone being dropped into a pond, and we're seeing private sector businesses now buying up some of the large buildings in the city centre and making investments and regeneration of those sites, which is exactly what the sort of effect that we wanted to see, which was that private sector investment flowing in behind the public sector. So a number of the large buildings around the city centre have already changed hands, and obviously members of the public will see those buildings being refurbished and relet in due course, with new retail coming in, new office space being created, and new living accommodation as well, which is, you know, exactly what we wanted to see the impact of the arena being, not just being a fantastic venue to see a show in the region, obviously. So with that one was for noting. I don't know whether there's any comments from anyone else. If not, I'll go on then to item 9, which is the update on supporting innovation and low carbon growth project. And welcome, Brett Siddell. Brett, over to you.
Thank you very much, Chair, and good morning, everyone, and thank you for the opportunity to speak to you today on the Supporting Innovation and Low Carbon Growth programme, which is one of the 2 programmes and projects being run by Neath Port Talbot. My name is Brett Siddell, and I'm the programme manager for Silk. The team also consists of Lisa Willis, and Nicola Pearce is the SRO. I'm going to be referring to the slides that were contained within your meeting papers pack throughout the course of this agenda item, so I would refer you to those. So a brief introduction to Silk. So this is a £58 million programme of 7 interlinked projects, which are all at various stages of delivery at the moment. We have 3 large infrastructure projects consisting of the Bay Technology Centre, the Switch Harbourside facility, which is the South Wales Industrial Transition from Carbon Hub. We're working very closely with Swansea University, who are the delivery partner for the Switch Harbourside facility. We also have the Advanced Manufacturing Production Facility, and then we've got 4 smaller projects, which consist of the Property Development Fund, the Low Emission Vehicle Charging Infrastructure, the Air Quality Monitoring Project, and the Hydrogen Stimulus Programme. And I'll run through each of those projects in turn over the next few slides. So the Silk business case was approved in August 2021, and I was appointed to the current role in March of last year. I think what's important to note is running through the whole Silk programme, there's a golden thread, and this programme was developed to support the journey from spin-outs to startups to growing smaller indigenous businesses through to commercialisation and creating local innovation clusters and helping industry to grow. So the first project, which has now been completed, is the Bay Technology Centre. We took ownership of that last year. We're very pleased to announce that it's won 3 highly prestigious awards to date, including a Net Zero Award, a Sustainability Award, and the Commercial Property Project of the Year. We're told it's the first commercial energy positive building in Wales, and contractors are receiving inquiries from far afield as Canada and how to replicate the facility in other locations throughout the world. We're hoping to have an official opening in the next few months with the Secretary of State for Wales. And at the time of preparing the slides, I indicated there were 2 tenants, but we currently now have 3. And within the next 2 weeks, that'll go up to 5. So we were really pleased with the level of interest in the facility. And I've included some links in your paperwork, which takes you to the promotional videos we've had produced, which showcases the building and the facilities and everything that it has to offer. I've included some images within your pack. And just to draw to your attention, the top left image, hopefully you'll be able to see that the facade of the building is clad in photovoltaic panels. People think that this is some fancy cladding, but actually it's a very functional part of the building. And the windows of the building were actually designed to fit around the photovoltaic panels. So as I said, it's an energy positive building, and the excess energy is supplied to the local hydrogen centre, which is located next door. So moving on to the second large infrastructure project is the Switch facility. So this is a £20 million project, which consists of a nominal sum of 16 million for construction and then 4 million for use with specialist equipment. This includes legacy equipment from the Steels and Metal Institute, which is located on the Singleton campus of Swansea University, and the purchase of some new equipment. We've currently just gone through the 2-stage design and build tender, and the announcement of the successful contractor will be made hopefully later this month. Switch is very different to the Bay Technology Centre. I mean, Switch is a unique and bespoke industrial research facility to support the steels and metal industry to decarbonise. So it's taken us a very long time with regular discussions on a fortnightly basis with Swansea University, so we can tailor the facility to meet the needs of the researchers that will be housed within the building. We organised the contractor open day back in October of last year, so that prospective contractors could view the equipment that would need to be housed within this facility and look at new building technologies that will hopefully be deployed on the facility to help to decarbonise the industry and really bring this building as close to net zero as possible. We received 3 excellent tenders, and the announcement, as I said, will be made soon. We're currently going through the heads of terms process with Swansea University, and once that is approved, we will then announce the winning contractor. So some of the smaller projects now under the decarbonisation theme, we've got the hydrogen stimulus programme. So that's to demonstrate the viability and commercial opportunities to the creation of hydrogen from renewable resources. We're working in partnership with the University of South Wales, who run the Hydrogen Centre, which is located next door to the Bay Technology Centre on the Baglan Energy Park. Preparatory works have been undertaken, and they're looking to install state-of-the-art equipment later this year. The air quality monitoring project is a localized hyper-data gathering activity using low-cost sensors, in 70 locations around Neath Port Talbot. We're currently analysing the first year's worth of data from that project, and the plan with this is that we'll be able to utilise these lower cost sensors in place of the larger, more traditional, costly sensors that are being used by local councils throughout the region, and help us to make more informed decisions on mitigation and intervention measures around local levels of pollution. So the staff are all in place on that project. As I said, it's been running for a year now. We're about to embark on the second year of data collection, and Ricardo is supporting us with the analysis of that data. The low emission vehicle route map, that's looking at new challenges posed by the increasing number of electrical vehicles in the area, looking at on-street parking and local parking hubs. So we will have a plan ready for discussion at the end of next month. The final 2 projects under the Industrial Futures theme. So this is a group of £27 million worth of activity. It consists of the Advanced Manufacturing Production Facility. This is a very early stage of delivery at the moment. So that's a £17.2 million project. It's going to be a hybrid building, providing a range of production units, which incorporate a pilot line with office space to support startup companies from the innovation and manufacturing sectors. We're currently engaged with regular meetings with Industry Wales, who are going to support us with pre-market engagement events with industry, so that we can really tailor the facility to meet the needs of local industry and provide the facilities that they wouldn't necessarily have access to going forward. The final project is the Property Development Fund. So this is supporting the viability of private sector schemes to develop bespoke and speculative buildings in the Port Talbot waterfront enterprise zone. It's a heavily oversubscribed scheme at the moment. We had 14 applications at the expression of interest stage, looking for £12.5 million worth of support, and we only have £4.5 million worth available. So it's going to be quite a difficult and complex process to narrow those down. We're reviewing the first stage applications in the first meeting tomorrow, and hopefully we'll be able to make an announcement at the end of February. As Phil Ryder mentioned earlier during item number 12, we've gone through various levels of assurance. The latest was held in November of 2022, where we received a substantial level of assurance, which is the highest rating available and is rarely awarded. This was from an internal audit perspective, so we're very proud of that achievement. We've had an external peer review in January and February of 2020, Gateway review in June of 2020, and a Gateway review critical friend review in October of 2020. We have a planned PAR for later in 2023. Excuse me. One of the new initiatives which wasn't originally foreseen under the Silk business plan and has come about through a recent initiative via Innovate UK is the launch of the Launchpad activities. Now, Innovate UK are planning to establish 10 launch pads across the UK. They've announced 2 already in the Tees Valley area and Liverpool region. Each launch pad will have £7.5 million of funding to distribute in future funding calls that will be created via consultation by within the local area and with Innovate UK. So the 4 local authorities worked together in a very short space of time to create a potential launch pad called Now Switch, which is an acronym for the Net Zero Wales Sustainable Welsh Innovation to Transition from Carbon Hub. So it's a consortium of the local authorities, Welsh universities, Industry Wales, and the proposal is that Net Zero Industry Wales will lead on this launch pad for the whole of the region. We were expecting to hear the outcome of this on the 5th of December. However, that's been delayed. We checked again yesterday and they're still in the process of assessing a large number of applications that were received, but we're very hopeful that this will integrate quite nicely with the Silk activity and other City Deal projects. So finally, the forward plan for the Silk programme is to secure additional tenants for the Bay Technology Centre. We have a very active and live pipeline of interested parties. We will sign the heads of terms between Neath and Swansea University and appoint the contractors for the switch facility. The hydrogen funding agreement will be signed in the next few months, and they will then purchase the specialist equipment that's needed to carry out that project. The air quality monitoring project will continue with additional sensors being deployed in the local area. As I said, we've got the pre-market engagement activity for the advanced manufacturing production facility. So that's starting to ramp up now, and we will be assessing the PDF applications starting tomorrow. So it just leaves me to say thank you for listening, and if there are any questions, I'm happy to take them. Thank you.
Thank you, Brett, for that really exciting set of updates there, and can see some real tangible movement in terms of delivery, which is really good to see. And well done on creating the acronym for a Now Switch. It must have taken a lot of time to put that one together. But no, more seriously, a lot of good work going on there. Exciting, and matches very much what I know, obviously, yourselves in NPT and in PEMS have done in terms of putting together the Freeport bid, which is based on green technologies. And obviously, as a region, we're well placed to lead for the whole of the UK on that agenda and help the UK reach its 2030 and 2050 targets. Clearly, from a Swansea perspective, we're very keen as well to see things like the lagoon progress. But I think the carbon projects in NPT are really exciting, and actually I look forward to visiting to see some updates very soon. So I'll open it up in terms of any questions or comments to Brett on the update there. No? Okay. All right, then we'll move on then to, thank you for that, Brett. We'll move on to item 12. Sorry, item, let's have a look, make sure I covered all of them. Item 10, sorry, please, first, which is the assessment of increasing construction costs. We had a report from Chris Moore earlier, which laid out the financial position in terms of where we are. And I will go to Jonathan Burns, who can give us an update in terms of some of those pressures we've alluded to previously, which are hitting all parts of the UK. For John to give us an update in terms of how that's affecting our working through of the projects here in the City Deal. So, John, over to you.
Thanks, Chair. So the purpose of the report is to provide you an update on the potential increased costs associated with the construction and inflationary pressures, which kind of go hand in glove. It's important to note that this is a point-in-time assessment, but it accompanies with mitigating actions, some which are potential and some that are actually happening as we speak or have happened. So what we're asking our joint committee is to acknowledge the increase in costs, agree that the mitigations are appropriate in order to share the report wider with key stakeholders, which for us would include both UK and Welsh governments, and that can open some dialogue and discussions. Before I go into the detail of the report, it's probably really important to talk about the contextual environmental factors that we have, which are critical to support the assessment. One is that we're in a volatile economy in terms of construction costs and inflationary pressures, especially as we all know and well versed in spiraling energy prices, costs of raw materials, etc. The cost and inflationary increases remain estimates particularly until the projects go into the procurement and then the contract signing kind of processes. So we're best guessing or estimating some of those things, but we're using as much evidence as you'll see in the report as we can, but that is sometimes difficult in these volatile markets. So they're likely to continue to fluctuate. There's no indication to suggest that our volatile economy in that sense is going to change anytime soon. And one of the key things is the cost variances often are largely down to, we outlined business cases between the period of 2017 to 2021. That's when we originally budgeted some of these infrastructure projects. So the economy is far more stable then. So we would expect things to move from outline into full business case. So that's the contextual kind of perspective. So what's the crux of it? Well, we estimate of our £1.3 billion portfolio, we currently estimate £31 million of increase in construction contract values across the portfolio. And there are a couple of caveats that I'll just cover off with that. These are derived from actual costs, current tendering prices, or cost estimations, depending where the projects are in terms of delivery timelines. Any future projections in the near future have been derived using building cost information service indices. So that's the industry standard. So we're using those. And what we've managed to do is provide information for 7 of our 9 projects, and that is outlined in the report. Why not all of them? Well, certain projects or phases of projects have been omitted at this point in time due to them maybe being delivered in 2 to 3 years ahead of us today. So it's a bit difficult to estimate where we would be in terms of inflation and construction costs at that point. So as soon as they get closer and start onboarding, those will factor into this report. You'll notice on the last page is a series of mitigating actions, either potential or actual. But there's common approaches to address the increase in cost and inflationary pressures. The 3 that I'll highlight from the report are identifying and securing additional funds. We've had a few instances of that across the portfolio. Revisiting of construction briefs that we've had, and in particular value engineering within the projects. And the third one is opening dialogue with contractors. So those are the 3 main mitigating actions. So what we're doing as a PMO, working with all projects and programs, is monitoring this impact of inflation, construction costs, and are the mitigating actions appropriate and reported. Any changes are reported through monthly and quarterly monitoring and our change management process. So from a governance perspective, we're doing what we can to get that shared. It's probably worth noting sometimes that has a bit of a lag because some projects and programs are in negotiations, particularly with tier 1 contractors. So we may not be able to report immediately on some of the dialogue that's happening. So as of today, the good news is we estimate approximately 50% of the increased costs have been mitigated or resolved already, with no reported reduction in portfolio objectives or the benefits that we've committed to by 2033. And my final point, Chair, is it's an operational matter, but we now have a construction costs community benefits subgroup as part of our PMO team meetings, and we ensure that all the projects and programs all can come to have a shared dialogue, sharing best practice, lessons learned, and we report that output then through our project lead meeting and through program board in the operational group. So Chair, that's the summary of the report. There's a lot more information in there, hopefully evidence-based information that you can read at your own time, but that's the highlight.
Thank you, Jonathan, for that, and really lays out there some of the turbulence in the wider economy that we're not immune from, but we are hoping to mitigate. And as you've pointed out there, actions taken already by the teams to try and ensure that any variances are dealt with. And as you say, 50% already mitigated. It is a snapshot in time, as you quite rightly pointed out, and things change on a month-to-month basis. Clearly, over the last 12 months, nobody would have foreseen the sorts of events that have rocked the economy from the war in Ukraine, which has driven up obviously energy costs significantly, driving up the cost of other materials, and then of course the the volatility in the government in London with several prime ministers, several chancellors, several different economic approaches, and huge impacts to the economy as a whole. So I think, welcome the work that you and the team have done in the central office there, and the teams on all of the projects are doing to mitigate the impacts of that, and that's what we'll continue to do. So we're not immune, as you said. I think City Deals elsewhere will be having exactly the same conversations around managing cost pressures. But thank you for the update. That one is for noting. And we move now then to our final item, which is item 13, the carbon reduction assessment. John, I'll come back to you.
Thanks, Chair. And again, this is for information as well for committee members. Back in July last year, our programme board asked us to do some sort of assessment. We know that our City Deal portfolio addresses and support is the grand challenge of carbon reduction, with a long-term aim of achieving Wales's net carbon target by 2050. And Chair, you mentioned that earlier on. So what we weren't necessarily aware of is what extent and how we're contributing towards that for South West Wales at a portfolio level, because it's not a specific investment objective across all projects and programmes. So this report is to gather all that information, show how we're aligned to the Welsh Government's new net zero carbon budget 2, associated national, regional, local policies and strategies, and probably more critically right now, aligns to other strategic regional initiatives like the Celtic Freeport bid and various other energy-related or carbon reduction bid initiatives, South West Wales Industrial Cluster as another example. So the assessment involved working with all our project and programme leads, reviewing existing business cases, working with the local authorities and partner institutions, looking at their ambitions and targets that they've set at an organisational level. Then, in accordance with that local national policy, we're talking to each delivery lead organisation to ensure that the facilities they produce and procure, operate, are all in compliance with the requirements that are set out within those policies and strategies. So as an example of that, direct contribution is made via all projects that build something, a City Deal infrastructure, by achieving at least a BREEAM Excellent standard. A significant contribution has been made to support the decarbonisation agenda, particularly in the 3 energy-related projects that we have, the upskilling of our workforce through the Skills and Talent programme, and the enhancement of our digital connectivity through the regional digital infrastructure programme. So we have lots of good worked examples which will hugely contribute towards that. So within the energy smart manufacturing innovation space, what we've done is set, and again it's in the report for detail, but we summarised and collated a series of bullet points summarising what our contribution is. So I'll just go through each of those very quickly. So the first one is we will have around 80,000 square metres of floor space with a minimum of BREEAM Excellent by 2026. We will have created at least 5,000 jobs across the renewable and energy sectors, created at least £620 million of gross value added, attracted at least £630 million of total investment within that sector, estimated to provide at least 6,000 skills and talent opportunities for the energy and decarbonisation sectors, created a regional centre of excellence in the renewable energy sector, grow at least 2 supply chains around installation, manufacturing, operations of blue and green technologies, particularly through Pembroke Dock Marine and Holmes's power stations, and enhance our digital connectivity that involves full fibre, 5G, Internet of Things to future-proof the digital economy across the region. So I think when you summarise that and put those in a summary kind of bulleted list, that's quite a powerful message that the City Deal is aligned and it's contributing significantly towards our carbon reduction footprint. And Chair, in summary, that's the highlights I wanted to raise.
Yeah, thank you, John. And as you pointed out, not something we're compelled to report on or bear in mind when we're delivering the projects, but an important part of our considerations more broadly. All 4 local authorities and the partners in the region will be working on contributions towards net zero, and to make sure that we assist the Welsh and UK governments in decarbonising the economies and obviously dealing with the impact of climate change. I think, this is a helpful report and a helpful set of papers. It does, align to the work that we're doing to support as a city region. Obviously, the Freeport bid by Pembrokeshire and MPT councils, and as I've said publicly, I don't believe that there's any better bid for a Freeport in Wales, and that should be coming to our region. And that's the plea I'd make to the ministers who have the decision in both UK and Welsh governments. And the work that we are doing in the region on green energy and climate change, I think, is not just of national importance, it's of international importance. And we have a chance to be not just a national leader, but a world leader in these fields. And from a Swansea perspective, just for a second, the work that we're doing with DST in terms of the Swansea Bay Lagoon, the Blue Eden project, is complementary to the elements of the bid being taken forward by other partners in the region. So, the Freeport, the lagoon, the general aspects of the work that we do and the action plans that we have for climate change, all aligned and all very, very important in terms of not just creating that future economy that we need in our region, but helping to make the world a better place for future generations. So you're very welcome. That report isn't in the vote on it, but I'll open it up in case any members wish to comment or make any statements on that. Yeah. Steve Jones. Steve, over to you.
Yeah, thank you very much, Chair, and would endorse everything you've just said there. This is, for me, and I chair the Regional Core Group, a really helpful and very timely report that John's presented in terms of the work that we're doing around the regional energy strategy that was adopted by the Corporate Joint Committee last March, and we're committed within that to report to the Energy Subcommittee on updates on the action plan that supports the regional energy strategy, and everything that John has outlined in this report aligns absolutely with that action plan and just reinforces the role that the portfolio, the programme of projects within the city deal is making to that wider regional contribution around climate change and now a net zero target. So really helpful and very timely report. Thank you, John. Thanks, Chair.
Thank you, Steve, for that. Okay, I don't see any other hands up. If that is the case, then can I thank you all for your attendance and just say our next planned meeting is Thursday, the 6th of April. So again, I'll wish you a Happy New Year. I know we're in February, but it's strange to be saying Happy New Year in February, but it's our first meeting of the year. And look forward to working with all of you over the coming 12 months. So take care. Thank you all very much. Diolch. Goodbye, everybody.
Thanks all.
Hello, Chair.
Hello.
Bye.